Hello, everyone, and welcome to the Sustainable Finance Podcast. My name is Paul Ellis, and I'm your host for these programs about developments in this fast-growing industry. In today's episode, we're going to learn how Sharia investment compliance aligns with ESG, that's environmental, social, and governance principles, and the unique benefits this integration offers to investors and startups. My guest is Rina Neoh, Managing Partner at Ficus Capital and Secretary General for the ESG Association of Malaysia. Established in 2018, Ficus Capital is the world's first ESG-Islamic Venture Capital management company. The firm offers investors in-house Sharia financial structuring and an ESG-Islamic framework integrated with the investment and monitoring process of its portfolios. Hello, Rina, and welcome to the Sustainable Finance Podcast.
Hello, Paul. Thank you for having me.
It's great to have you on the program. I know that it's already after 10 p.m. where you are, so we appreciate you staying up late to join us for this conversation. And we're going to jump right into the questions that we have. So, Rina, would you please explain what Sharia-compliant venture capital is and how it differs from traditional venture capital models?
Well, I guess everybody knows venture capital is investing in, a growth stage company, and most of the investors expect a huge return, right? So it's a very risky investment structure. But the clear difference between Islamic VCs or Sharia-compliant VCs is basically just that the VCs or the fund managers have to follow the financing rules that is Sharia compliant, which means we focus on ethical investing and we promote social justice. So, for example, such funds or the Sharia compliant funds, we avoid business activities like alcohol, gambling, pork, and interest-based lending. So that is a totally no. But instead, we put extra effort to look at sectors that contribute positively to society, such as healthcare, education. So unlike traditional venture capital, like I said, which seeks high return, Sharia-compliant funds prioritize moral and social consideration. So we tend to promote fairness, transparency, and risk sharing, which is a very important instrument. I'm sure you have heard of a lot of VCs. They put really terms and conditions that is not so favorable to the founders. But for us, we believe that once we invest into your company, we are partners and we want to grow the business together. We're not, just a financial investor. So, for example, Islamic VCs, we are not allowed to invest in businesses that we deem haram or not permissible in Islam. Simple examples, for example, VCs that are Sharia compliant, we are not permitted to use, for example, entertainment money in alcohol. We don't do that. Of course, in capital markets, we do have entertainments and stuff like that, but this is totally not permissible. Even the investee companies are not permitted to do that. And I think it's most important that that we are clear with our investees and also our investors. But I do see a lot of education needs to be, done in this space. It's a new space. I think is exciting for us, and the reason why we chose to be a Sharia compliant VC and later a ESG-I VC, which is ESG, of course, we all know, environment, social governance, and Islamic. Because my partner Hidayat is a expert in Islamic finance, and I bring almost 20 years of investor VC experience to the table. So that is the reason why we came together and we started Ficus.
So you've been inspired through your work with and management of Ficus Capital to combine ESG principles with Islamic investment methodologies. Where did that inspiration come from for you? How did that get started?
I think we're inspired by the natural synergy. Of course, when you launch a VC fund, you need to have a thematic. You need to tell your LPs or your investors which sector you're investing in, which stage of the investment, where do you actually think that you played the game well, in which sector and all this. So that's why you have like a green fund, you have a women fund, you have a investors of colors. So for us, we know where our stronghold is. My partner and our chairman is very familiar with the Islamic space, and for myself, I've always been an advocate of good governance, and I think we started as a Sharia-compliant VC fund, and when we saw that ESG was a trend, and further study, and we see an intersection. Of course, both actually promotes social equity and good governance, as well as stewardship as well. So I think that's a natural integration. That is why we said, perhaps let's do this, because to be frank, a green company, a company that does not do harm to the environment, does not mean that they are ESG compliant.
That's right.
And I think, it's very important. Business exists to make profit. That is 101, right? How you run the business is really where I think the ESG frameworks and standards are trying to help companies navigate this, so that that you run the company with integrity, right? I think education company is doing good, right? But it may not be ESG compliant, because it could be like the governance is not there. A hospital is obviously a good healthcare place. But if the workers there are overworked, there is no good governance, integrity of privacy of patients' data, that company is not, compliant. So I think there is an intersection between that, and that's how we feel that if we combine these two, we will have a unique proposition.
Yes, well, it sounds like a good match to me. Tell our followers what the current state of Sharia-compliant venture capital is in the markets in Asia, and what opportunities do you see for growth?
I think there are two ways of looking at it. We can see that some of the VC funds are actually saying that they are ESG compliant. So as a company, you can be ESG compliant, but it doesn't mean that you actually trigger it down to your investee company, right? Just like companies can be ESG compliant, but when it comes to scope 3, it doesn't mean to your other suppliers are also compliant. In our case, of course, we see that there is a growing demand, because I think in the world there's like about 2 billion Muslims, and there's really lack of Sharia compliant financial products for this target market. And of course, I just need to reiterate that the Sharia compliant fund does not mean that it is only for Muslim. Some of our LPs are Chinese, Indian, and they come from different background. And the companies that we invest in are not necessarily just by Muslim founders. So we have founders that are Malaysian Chinese, Singaporean Chinese, Indonesian, are of course Malaysian Muslim as well. It is just that the sector that we chose and the structuring, right? So for countries like Malaysia, we feel that Malaysia has always been known as the a more progressive Islamic in terms of Islamic finance. We see a great opportunity that this area is going to grow, especially with the ESG push. We feel that it is a big opportunity to tap on. But of course, it comes with challenges such as regulations. We do see that VCs are actually claiming that they are Sharia compliant. But I think for Ficus, we feel that we do it in a more thorough way. We actually internalize it in our operations as well, from the due diligence process to monitoring, and of course, to exit as well. So it's a very holistic approach.
Okay. So when you speak with entrepreneurs and startup companies about the advantages that they can gain by choosing Sharia-compliant and ESG-focused venture capital funding, what are those conversations about? What do you speak about?
Well, I guess VC is also a very competitive space. Most people think that because we especially startup founders, right? We have come across startup founders that told us that, we're not coming to you because you're Sharia compliant. It must be complicated, structuring and all this. They will prefer to go to a VC where they have terms that are very simple, or the famous one, KISS, right? Keep it simple, right? But as we explain to them, they start to realize that actually Sharia compliant VC terms are more favorable. We are more fair in a way that we don't invest and we can't take interest, for example. So there's the interest element is not there. And there are other things that we tell them that if you are now not just Sharia compliant, but ESG-I compliant, you become more attractive to potential investors, to your customers, because they know that you run the company in a proper manner. That's whole reason why ESG compliant companies are getting better valuations. Of course, then we got the curveball to say that startups are busy, firefighting every day. They're just trying to survive. I said, yes, that's true. I think all businesses, survival is key. And the next question is that, do they have time to actually look into, being compliant? I said, while it is not a must, they're not public listed companies. There's no rules and regulation that they have to be compliant. But since they are at early stage, it is easier for them to adopt and to make it their DNA, because ESG compliant is not just a test that you take and then you pass and you forget about it. It has to be intertwined with your business strategy, like how you run the business every day. I would say it's a marathon. It's not a short 100-meter sprint that you get your ESG grading and you forget about everything, right? That's not what we want. So when we explain to them in this manner, they understood. Of course, you have to give examples, especially in Asia. The founders tend to want to see, can you show me who are the companies that has got a better valuation exit if they comply, right? Because I'm so busy. So I said, well, I guess, after VC, where are you going to? You are obviously telling me that you want to list the company, right, as an exit. Every founder's exit plan is an IPO, right? But I said, yes, before you go IPO, you might want to raise private equity money. You might want to get debt, from the bank. And banks are, putting a lot of green financing ahead, right? I said, being ESG compliant might be one of the checklists that the bank will actually impose on you. So you better get ready. And most of the private equity firms are mandating that their portfolio company is being ESG compliant. Yeah. So I think we need to take a little bit of time to explain to them. But once they understood this, it is easier for us and for them, because I said, if you follow this framework, we can all have a peace of mind in terms of monitoring. I don't have to disturb you, and you don't have, you can actually navigate it yourself. So I think if you ask me, yes, the team took a little bit more time to explain to the startups, but I think it's worth the effort.
Good. Well, we work and have been working for a couple of years with the firm Novata. I don't know if you're familiar with their work, but they now have offices, I think, in Singapore, in London, and in the U.S. as well. And they're growing very fast as a company that acts as an on-ramp for venture capital and private equity firms, and supports the growth and development of the portfolio companies in those types of structures. What additional challenges does Ficus Capital face through the Sharia compliance position that you put yourselves in with the people that the companies that you are incorporating into your portfolio strategies? Because you're right, you don't have the full scope 1, 2, and 3 recording requirements yet, and those are probably down the road for the companies that you work with. But it's an interesting dilemma, right, at the moment, because some regulatory infrastructure is already in place in Europe, coming in the U.S., and all of this kind of reporting requirements are going to need to be incorporated for all of these types of companies over time. So I think it's very exciting that you're taking the initiative to get ahead of the curve in Malaysia. And tell us what trends you see in investor interest around Sharia compliance and ESG-focused investments in the particular region where you are operating.
Well, in the last couple of years, I think, from the ESG perspective, I certainly felt that everyone that I know on LinkedIn, 50% became an ESG expert. That's for sure. That shows that we're at the right trend. But ESG and Sharia compliant, both the combination itself is something new to most people, right? Even for us, right? It was a concept that we came and the team said, I think this is a great framework that we would like to follow, right? And we're not sure if this is a framework that other VCs will want to follow, but we said, why not? We take it to the next step, developing or coming up with a product or a framework or a service that nobody would use. Is just like the startup, inventing something that nobody will buy.
Right.
So what we did was, so we came up with a basic framework, and we took it to INSIF University, which is a university by our central bank. So they are experts in the Sharia-Islamic finance. So what we did a year ago was we, together with INSIF University, called the stakeholders, the central bank, the bankers, the investors, the family offices, and all of them come together, and we have workshops to actually debate to see, what kind of framework is actually suitable for startups, in this space. Because there are so many frameworks, even, in ESG Association or in SMEs. We were just trying to see which one is the best, and each of the government body also come up with their local version. So at the end, I think it's the version that everybody thinks is has the framework that is enough for the startups to get started, but not too complicated to shoo away everybody. And we finally, after a year where the researchers went to do the surveys, right, they have finally published the framework and a portal. So it's actually free for all, because, if the more startups, the more SMEs do their assessment, is better for us, so that they come with already a health check of their business status. So we are rolling out this together with INSIF University. And you mentioned about the trend. Of course, we are seeing that the global sukuk issuance for the first half of 2024, I think it reaches about 170 billion already. So I think we are seeing that this number will continue to grow. As you know, VC is an alternative investment asset class, while sukuk Malaysia is actually quite famous and in forefront of the sukuk issuance. But sukuk issuance is the only, previously was the only instruments that is available. So we do see that younger generations of Muslims, the third generation family offices, they definitely want financial return, but if they are willing to sacrifice a little bit for the social good.
Okay. So this looks like it's going to be a very supportive infrastructure for businesses that want to be Sharia compliant in Malaysia over the next 5 to 10 years. How does Ficus ensure that the investments that you make are Sharia compliant on an ongoing basis?
Okay, so we have our, of course, very stringent due diligence. And I must also say that because we are Sharia compliant, we are required to have a Sharia board, in our structure, and that might cost a little more in terms of the funds, the fund setup and all this. But by having that, right, it actually minimizes a lot of risk that is not not being addressed with traditional VCs. I guess it's important that you pick the right candidate to invest in, but that's step one, right? We are investing in growth stage, and it means that the driver of the business is still very much on the founder. You're not investing in an MNC where, if the founder decided to go holiday sometime, and disappear, business as usual. But at this growth stage, Series A, the founder and the founding team is still very critical. And regardless of whether you have an ESG framework, you have a Sharia compliant framework, human being is the most, I think we're like water. If they decide to change, they change. So having said that, when we do the monitoring, we make sure that, there is a constant check and balance that ensures that they comply. So of course, the quarterly reporting is something that is not uncommon for VCs, but for Ficus, since we have a Sharia element, we actually have sessions with them more often to actually explain to them, fundamentals of being Sharia compliant, and also what we did was. For Ficus, I'm not sure if other VCs do this, but we feel that as a small fund, we need to put extra work to safeguard our investments, right? We don't have the big deep pocket to just invest and have the ability to shoulder a lot of companies going bust. So what happens is that typically we sit down with the founders and the team to do a strategy map. This strategy and this house map is our so-called, if you call it a Bible, that we all will follow and we will all track, right? But fundamentally, I think we are seeing more and more founders appreciating this kind of framework being, sort of implemented within the company. It helps the founders to actually navigate. It helps the founders to actually see blind spots. So we have, there are some questions that ask us, your Sharia-compliant fund, can you share with us any success stories? We are just 3 years into our fund. We are still deploying the last part of our fund. But I hope in the next 1 or 2 years, we'll be able to share some success stories. That will be the real testimony if our framework actually works and we manage to mitigate the risk or help the founders get a better exit because they seems to be more sexy than the other startups, right? In terms of the usual business growth, I think people want to do business with someone that they know will be there for the next 5 to 10 years.
Right. Okay.
I think in Malaysia, the ESG started with the export ministry because Malaysia export a lot to Europe and they have no choice but to comply.
Right. So they're complying with the European regs already, right? Okay.
Yes.
All right. So listen, one of the things that our followers are always interested in is how they can learn more about the companies that we feature on these episodes. And you've mentioned a report that I think Ficus has recently published. If you can send that to us, we will attach it to these programs so that people can do more study and research on their own. And where online, Rina, can our followers learn more about Ficus Capital and Sharia-compliant venture capital investing? And how can they get in touch with you for more information about the topics that we've discussed in today's episode?
All right. So our website is www.ficus.vc. So all the information about the funds and the people behind the fund are there. You will also notice that Ficus, we have currently Fund 1, which is a Ficus C, which is investing in technology. Then we are also in a process of fundraising for our next fund, which is Green Tech Fund.
Okay.
So this fund is basically focused on more matured companies, but is definitely in the green industry space. And I must say that this new fund is actually a joint venture with Malaysia Green Tech Corporation. So they are an agency under the Ministry of Science. And they are the so-called, endorser for any green projects that is, brought into Malaysia or the Malaysian companies wanting to get the green endorsement. So, of course, we have our LinkedIn. You can, of course, follow myself or connect with me on LinkedIn. And I think I'm not so active on Facebook and Instagram, but LinkedIn, I will definitely try to answer questions. I do get a lot of questions that people ask me if I could invest. I try to answer as much as I can because I feel that, while to me, it may just be another pitch, but I think to the founder, it is like, if I 20 years ago, if I were to pitch and I send to Paul and Paul reply me, regardless of whether Paul wants to invest or not, it just gives me a little bit of confidence that people actually care.
Yes.
So I usually will tell them that, sorry, this is not within my mandate. Although I hope that the founders actually do their research before they actually sent in the email. If they do the research, they would have known that Ficus only invests in Southeast Asia. Mm-hmm. We do not have the luxury to invest in US or UK, maybe one day. So, but I think to me, by answering just one line that this is not within our mandate is the least I could do when I have time. Yeah.
Okay, good. Well, thank you so much, Rina, for spending the time with us today and joining me and the followers of the Sustainable Finance podcast in today's episode. And our followers can join me again next week for another episode, and visit our new YouTube channel for access to this episode with attachments to learn more about Rina Neoh and Ficus Capital. Thanks for joining us, Rina. We really appreciate it today. I'm Paul Ellis, and this is the Sustainable Finance Podcast.